So hello active traders and welcome to our Trading Week Ahead broadcast for today, Saturday, June the 3rd, 2023. I'm Ken Calhoun, your host, coming at you live from Colorado here in Colorado Springs with a brand new episode for you. A really interesting market we've had lately, right? We finally broke out of the consolidation, but we're not out of the woods yet. And I'll tell you why. And this is the most important thing I will make note of today for you. So let's listen up. The most important thing, and I hope that you've got eyes on it, is the market's coming up to 1 year high resistance. We have not yet broken the 1 year high. We're at resistance. This is a good place to start tightening up trailing stops for any positions you're in. This would be a really bad time to initiate new trades, even though it looks like a big rally. Wall Street's really good at faking people out, right? Never buy right under resistance. Everybody knows that, right? It's a stupid place to buy. That's the worst place you could ever buy in anything, including markets. We trade markets first, individual stocks and ETFs second. We're price action traders, and we use technical. So we're right under the 52-week low. It's like I was day trading the stock. I'm in at say 21 and a quarter, or 21.2, and it goes up to 21.9. I'm not going to, and 22 is resistance. I'm not going to buy right underneath that. So what we want to do is see the thing we want to do is see the S&P and the 3-day rule, right? Ask any floor trader. We want to see our market break above resistance and hold for at least 3 days before putting on strong long positions. So next week, probably a week of gamesmanship and up and down price action. Next week is likely to be relatively choppy and tricky, not a straight up to the moon like we've had just Thursday and Friday, right? So the point is, wait till the market's gotten to above a 52-week high for a minimum of 2, preferably 3 days, somewhere north of that 43, 45, or wherever it is. I'm going to wait for it to get over 4350, 4350. Once we get at least that for at least 2 or 3 days, then we can look for aggressive swing trading longs. But right now is a good time to not only look for swing trading breakouts at new highs, but also in case the market fails and it goes back down for whatever reason. Now would be a good time to look at buying off support on our inverse instruments, which are obviously at bargain pricing here. For example, SOXS, way down here, right? Really inexpensive, and for good reason, or our SQs, right? So the inverses are at a 1 year bargain price right now. So keep that in mind. That's the most important thing I'll tell you. Be on the lookout for potential pivots and inverse instruments. No one on the street is going to tell you this. Nobody on talking head television is going to tell you to start accumulating shares or looking for any upside pivot and inverse instruments, because they're all drinking the Kool-Aid saying, hey, the market's in a big rally. Market sells to amateurs, okay? They're selling to you right now, okay? Professionals. You want to be selling to amateurs as well. So if you're in anything that's long, the number one tip is make sure to scale out or get out if it loses the previous day's low, a 2 or 3 day low. Go to cash. Really important place to lock in profits is right here, right now, this upcoming week ahead as we approach the 52-week high in the S&P. Nobody's telling traders this, by the way, because they don't want you to know how to trade and make money. They want you to lose your money. And I think one of the reasons my training's been so popular over the years is we always look at how to be a step ahead of Wall Street. So you never buy right under resistance. We all know that, right? And you don't buy right the instant it goes above resistance. That's a false breakout area. What we want to see is the head fake to the upside. We expect a pullback rollover to shake out people, and then that's where we keep a close eye to see if we get those 3 days above the 52-week high. Okay, then all full steam ahead we go in. Or if the market fails and drops for a couple of weeks, you don't want to be on the wrong side of that. So that's one thing to keep an eye on. And the other, so we pull down into our 90-day chart. That's very important. That's good, valuable intel. And the other thing is the VIX is down now at its lows, down near 1415. I'd like to see a recovery of, to stay a long bias, we want to keep under the 15 here, because that's right under support. So what you want to do as an active trader is keep an eye on your volatility index during the next week or so, and only go long if the VIX stays under 15. The second the VIX pops over 15, get out of long or start tightening up trail stops and or go to cash and long positions. Okay, so that's a really important secondary indicator and a very valuable one. If the VIX gets back over 15, you may want to not go long the market, because when the VIX goes up, the market goes down. Keep an eye on that 15 to 16 region. And the other place obviously is up here in the 21. If it ever gets up there, then we have strong selling. But for now, we're loss of support. Keep an eye on the next stage to see if we continue down or if we cycle back up and chop. Okay, now with that, let's take a look at some rockstar charts, shall we? We've got just a few minutes here. Just a reminder, if you're not yet a member of my live trading room, I've trained tens of thousands of traders since 2000, and I've ran the room since then. My trademastery.com/live is the correct ticker to visit for that. And I urge you to take a look at some of the fun stuff we have lined up for you. There's so many new members too, so thanks. We'll get back to the charts here in just a second. Let's see. Boom. So I put the ticker in the chat box, or the link in the chat box. And so you may want to keep an eye on that and consider joining my live room next week, because it's really going to be an excellent week. We had so many winning alerts last week. One thing I've been remiss on, I've had a very busy personal schedule, but I'm going to start putting a lot more charts of the day, videos up, and examples of all the winning alerts that my members get benefit from. A lot of smart members also post really good tickers that we work with as well. So anyway, let's move on. Good swing trading charts, and then we'll look at a couple of day trading charts. This one's good, APLD over the 10.5. NU looks great, right? Going from 4 to 7 in a continuous 45-degree angle breakout. Abercrombie and Fitch, well-dressed with resistance at 32. Now we'll see if he breaks 32 and keeps climbing up, but so far looks good. Next chart, EXTR. EXTR. Water run from 17 to 22. What you want to look for, by the way, and what I've taught so many thousands of folks over the years, is continuous runs. You don't want choppy caterpillar charts. You want something that looks like a straight line 45-degree angle up, right? Preferably with a large ratio of green candles. The green to red candle mix should be mostly green the last week, right? To tell you you've got a hot one that's getting bought. Next up, KBR. What I like about this one is a big green candle, a large range candle in the right color, right? So for example, this is a nice green candle. After this minor pullback, we had a hammer. It's hammer time. Ba, 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 boom, flawless victory. And now we're right under 62. So I want to see if our KBR here gets over the 62 whole number. Probably not going to happen Monday or even Tuesday, but maybe later in the week. It'll probably drift around for a day or two, and then if it's going to break, it'll do so midweek or later. Do keep an eye on KBR. If it does continue up, that's a good up chart with a very hot candle on Friday. And the last of my picks is NNOX. NNOX. And again, the reason I like this is one of my favorite patterns that I teach you guys is small candle followed by large candle and an uptrend. That's exactly what this has, especially on inclining volume, like you can see here, with over 5 million shares traded yesterday. Anyway, looks like a good breakout to the upside. We'll see where it goes. Now you folks had asked about these charts. Let's take a look. I say with some trepidation. And if you have any tickers you'd like me to pull up, let me know. We got a bunch already, so let's take a look at what you guys have. So today, you folks had mentioned these. That's a rockstar chart. That'll play. BHVN. What else does it say? It's a good chart. I'm buying at new highs. Looks good. CFLT, another brilliant chart. That's a really good one. What I like about this one is it's got a steady stream of green candles and a 45-degree angle breakout. So people are continuously piling into CFLT. That's probably the best chart I've seen so far. Beats mine, so congrats. That's a good one. That's another great chart. I like these AEHR, mainly because of a big green candle that propelled price to just under the previous high. And then yesterday we broke over it. So we broke resistance. If it continues on up, that looks good. Apple. Good steady grinder. don't trade Apple, invest in it. Anyway, and this is probably a fine play for longer term investing at any new high. Apple's healthy lately, so we won't take a bite out of that. AI, the next one. No, that's good for day trading, and we often mention this on my live room. I make calls for AI. We did last week. I remember on the Tuesday it was, yeah, it was good for us, but not good for swing trading. Now, why would this chart not be good for swing trading? I mean, after all, it did do a nice little run up there from 18 to 40. Why the heck wouldn't we want to swing trade it? Well, the initial run was fine. But yeah, Judy says, yeah, not consistent up. That's exactly right. It's all over the map now. It's not consistent. As long as it's consistent, we stay engaged. The instant it starts going bat blank crazy and up and down all over the place, we stay clear because we don't want to risk our capital on random charts like this. So while good for day trading, would not be good for swings, in my humble opinion. Eli Lilly. That's a healthy chart. That's fine. I have no objection to that. Going from right over 3 to 450, good range, good trend, up in new highs. We'll see if it breaks. Now, we had a bearish engulfing there, you can see a couple weeks back, but it's slowly trying to climb back up. Again, I will not go long unless it breaks, say, 460. Not a trade recommendation, but just what I'd be looking for. You know, that's a perfectly horrible chart. MMI, that's the first bad chart I've seen. This is the worst chart of the day. So a nice big red star and a check mark for whoever mentioned that one is a really good example of what never to trade. No trend, no directional strength. This one, the range isn't good enough for $120 a share, 130 a share. I'd want a much wider trading range, and it's gaps all over the place. It's very inconsistent. So Applied Materials, just say no to that chip maker. Next up, IoT. I like that it broke out to new high on a gap. But it's not a consistent chart, so it'd be too risky for a swing. Day trading, sure. Swing trading, no. Kohu, that's a terrible chart because the ranges are choppy as heck. You'd very easily get stopped out on that, right? As those of you who've been following me for decades know, I like to advocate using no more than a $2 stop for most things and or the loss of the previous day's low. This is all over the map and we get stopped out, so no. If it doesn't play by our rules, we don't play with it because I want things I can make money with. Potentially. Microsoft's a good steady climber. I don't see any objection to that. That's more for like investors and traders, but that's fine. So you guys did good. Y'all done good. Let's see if we have any other charts. I want to go take a look at a couple day trading charts though. Then we'll come back to our swings, but with only a couple of exceptions, you guys did good, so thanks. Now let's take a look at a couple of intraday charts. We've had really good runs in some of our plays here so far. Interestingly, StockS was up despite a long market. Now there's short gold, right? So Dust did a nice little climb up, though it's intraday range on that one. I like my view that it ended the day up at a 2-day high, so that's good. And the S&P, can see the pattern here, nice steady uptrend, so relatively long pattern in that. If we take a look at a couple of these charts, PTON, a steady climber. Many of the charts that start strong end weak, like this one, UCAR, it was good for us in the beginning of the day. What was it? Yeah, I called it a 13.7N out near 14.5. So it was, we got the tail end of the run up there, but the rest of the day just kind of dropped and chopped, just like this one, MMV. Initially, I'd call this, this was one from one of my smart traders, Mick, and he had mentioned it at 197, I think. And I said, let's wait for it to get over 225 before going long. And sure enough, it ran up and I said, let's go to cash right under 3. And that's a really good example of my whole number strategy that you can learn exclusively in my live trading room, where we look for breakouts right above whole numbers. And then live in real time, I'll tell you when to get in. And once it gets right up to like the 0.8 or the 0.9, you're up 60, 70 cents. I say, let's take profit and we're done. So this is a really good example of that whole number strategy. And the way it works, it's very simple, very easy, which I like. The older I get, the more I like things that are easy to understand. Notice that there were trades that have been had between each whole number. I just had us focus on the one that I thought was the best, which was the 2 1/4 long, sell right under the 3. So we didn't get the bottom, we didn't get the top, we got the chunk in the middle there. And that's fine. That's a good day trading approach where we wait for it to get above a whole number and then play it safe. All right, what else? But that's a good example of the type of day trading chart we learn from and work with our members on in the live room. And again, for those of you just tuning in, you can join my live room at trademastery.com/live. I've got a trial membership. You can join as a regular member, and occasionally I have discounts on annual memberships as well. So really good place to learn, at least according to a lot of people. And I'm a money show speaker and a stocks and commodities author. You may have seen me in every single month of stocks and commodities in my momentum column, trading on momentum column. I've authored for several years in stocks and commodities. All right, let's get back to it. Now back to our swing trading charts. The EXTR is CFLT, that was the best one. Yeah, that was it. Anyway, these are the kind of charts we like to cover for our members for swing trades. So we cover both swing and intraday trades in the live room. And these are the kind of charts that we like, are things that are consistent. They've got a nice, clean directional breakout and don't chop around much. That's your thing. Jim's asking, let's see, could I talk about where I place stops on swing trades? Well, I usually break the trade in half. So actually, I heavily weight the first exit, and I leave a little on the table in case it comes back to life. And I would do a loss of a 2-day low. So, for example, what's a good example? He's asking about Apple or Microsoft. Sure thing. A loss of the aggregate 2-day low. So, for example, if we were to buy, say, 182 on Monday, we would stop out if it goes down to a loss of that at that point previous day's low, which would be about 179. So buy 182, try to start, put a hard stop at 179 for most of the shares, and maybe give it to the previous day 176 or so for the remaining shares. But the simple strategy is look for something that ends the day above the previous day's high, okay, for long or scaling in, and sell if it ends the day against you under the previous day's low, okay. And it's a very good, like a 2-day up and down strategy. Yes, yeah, Cardano has been good too. We've been covering CVNA mostly for day trades last week, several days. See, that's a horrible chart for a swing trade. That's a terrible chart for a swing trade because you get shaken out. But it's a great chart for intraday. And I was covering this for our members last week. I think it was Thursday and I want to say Tuesday and Thursday. Let's see. Yeah, good example of a runner from 13 all the way up to 17, kind of chopped around on Friday. So for example, let's say you're swing trading this one, NNOX. November, Oscar, X-ray. Now let's say you bought some on Friday. Well, good for you. But if it gets down, well, let's say we're still in yesterday and this chart's doing this, you'd put a hard stop for most of it right under the aggregate 2-day low, say right under 17, say 16.9 would be good for a stop for a swing trade in this. A scale in trade would be right above the previous day's high, in this case, right over the 19. Now that we're up to just under 22, the breakout over 22, say 22.20, would be a good long term for that. And at that point, you would trail a stop or reset your hard stop to just under the previous day's low. In this case, it would be right under the 18, let's say 1780 or so. So a simple 2-day strategy is a good one to, you don't do it all or nothing, but maybe break the trade into 2 or 3 segments. Say if I'm long, say 600 shares, I'll usually scale out of the, say 400 at the first sign of trouble and the remaining 200 if it loses a secondary S1 level. And I'll scale in on the ones that work out And that's where my biggest winning money trades are, is things that scale in on a breakout continuation. I'll add, say if I'm in 400 shares, I might buy another 200 if it goes up another point or two. So always good to scale. Hey, Mick. All right, so thanks, folks. I think that's about it. Let's see, Ron is asking about RTY. Let's take a look. Maybe I didn't read it right. Anyway, we've got lots of good charts to work with. I think we're going to wrap up here. We've got a good size, healthy room. And if you'd like to learn from me how to manage entries and exits, how to find these charts and answers in live real time for any questions you might have, do be sure to join my live room at trademastery.com/live. And I'll see you guys there. Anyway, thanks for being here. I'm going to wrap up now. Have a great trading week ahead. Be safe out there. Volatility can cut both ways. Remember, big picture. Well, a lot of people logged in recently, so let me just briefly repeat what I mentioned earlier about the market. Because the market is right under the 1-year high, right? This is the 1-year S&P. Can do that down a little bit, but we're hovering right underneath it. So now would be a really stupid time to buy any stocks. Talking heads want to sell you into buying stuff so that their institutional clients can fade, and they'll sell to you before things crash and go back down. So now would be a really stupid time to buy new stocks. What you want to do is see the market stay above the 52-week high for a minimum of 3 days. Okay, at least 2 days, preferably 3 days. But make sure we get over, say, it's not horizontal. Well, it's around 43.30 or so, I believe, is the 52-week high. Anyway, I'd want the market to stay over 435 for at least a couple of days before putting on incremental long positions in this market. Remember, when it all looks great, it's always darkest before the dawn, and it's always brightest before the crash. This is a good place to sell into the market on any pullback or any retracement or any weakness. Be sure to sell that because the market is at a teetering point. It's right at a very tipping edge. All the talking heads are saying, hey, the market's going up. Yeah. They're the little cheerleaders. Bam, 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 bam. They're trying to fake you guys out. Don't buy it. This is a place to do what in secret they do with their institutional clients. This is a place to be selling to the public, not a place to be buying from the retail or the institutional guys. All right. Of course, my institutional clients are going to hate me for saying that, but yeah, I'm here for the average trader is my main audience. So, just those folks. So play carefully. If we do stay above that 43.50 for a minimum of 3 days, okay, I will say we're in a long market, but we're too early. We're right under resistance. It's a good place to be selling to the public and tightening and trailing stops on any open positions. I expect a head fake up, say 40, maybe to 43.30, 43.40, teeter-totter, maybe market does a big pullback, and people are all shocked. Now, next Saturday, when you and I are here together and you see the market did what I said, it goes up to 43.40 and then it's down to like 41.50 or something. I'll say, see, I told you so. So just remember that. Mostly cash next week, day trading or most 2 or 3 day swings. Be very conservative next week because we're right under resistance. And it's going to do a head fake, false breakout, pullback, and then after that, that's where you can start making serious decisions after the fake out. Okay, we anticipate that. And join my live room, and I'll walk you through it every single day. All right, take care, folks. Have an outstanding weekend, and I will see you when I see you. Best wishes for success in your trades. Trade smart and stay safe. Bye for now, and have a great weekend.